I'm going to go back to the challenge today. And a warm welcome to one and all. And for those of you not seen me before, my name is Langers. I am the coffee obsessed Scruffy trader. That's right, we all know Scruffy likes a coffee, and he does on a Monday morning. Monday is quite a quiet time for me. I don't trade a lot on a Monday, but I do like to set up what I'm doing for the week on a Monday. In other words, I watch the markets and finish off marking my charts if I haven't done so across the weekend, and just get a gauge of what's going on. But what I'm also doing today is this 10 pip challenge. It's a discipline challenge of one trade a day on a single market for 10 pips. And the idea is to compound those 10 pips into something tangible. In other words, start with a small account and build it up into something that can give you a nest egg, or build the account into something that could possibly become a living wage account. But the idea of this sort of exercise is to show you that trading is not get rich overnight. That's borderline gambling, and it never ends well. It really doesn't. So let's have a look, see where we are. I will be on the FTSE this morning, and each morning what I also do is I jump into the Scruffy Squad, the Discord group, where they're all sitting, well, they're all having a chat about trucks this morning of strange things, but they do get into it as well, the charts and what have you. And I've done the bias, and it is a buy and it is a gain. Now I post this every morning for them. The meat and bones of the Scruffy Squad is really this video library down here, where it's pretty much everything that I do, and then the rest of it is just for you guys to chat amongst yourselves, and I chime in as much as I can. But what we're interested in today is the chart, and that chart for me is the FTSE. Now, it's not quite ready yet. It is pushing down, and I'm waiting for it to push down, because I want a bit of room to get up into where I need to be, and that is up at this level up here. So maybe in the next sort of 15-20 minutes or so, because it's pushing down onto this level. I want to see what happens at that level.
We're waiting.
There we go. We can see what I'm looking at more clearly, and that is this level here. See, it's moving down. So I need 10 pips before this level. Okay. And the easiest way is just get yourself a little measuring tool. Just measure yourself 10 pips down, which is there. So as long as I can get into the market before there, I'm in with a shout. All right, just a simple marker. I know what my bias is. My bias is to the long side. I just need a reason to get in. Now, I haven't quite got one as yet, and if I look on this side where I keep my analysis, it's not far away. Might be in with a shout. So we'll look at that in just a moment. Now, this is the actual sheet that I've just shown you, that I showed the guys earlier on this morning before I came on the camera. And what it's shown me is strength and weaknesses. And there's, as you'll see, the markets are pretty flat today. If you go through the charts, you'll find sort of cable, things like that, is flat. And this is kind of picking that out. Why? It's holiday in the US, the federal banks are closed. So that's why the dollar's kind of middle of the ground. You know, it's just a bit flat. So it's pulling out sort of pound JPY and euro pound as contenders if you're going to be Forex trading. But because of margins, etc., I am stuck with the FTSE. Now, today it is moving up to, so it's 119 was the last one, so I can go 131. So look, see what 131 does. I haven't got enough margin, so it has to stay at 119. Okay, because that's the other part of this exercise. It's showing. Oh, hold on. Yeah, this is looking pretty good to go. So what we're going to do is I'm going to put in an order for 50p. It's good. Spun round at the right time, just above it, for 10 pips. But I'm also going to put an order in at 64p, a couple of pips behind it. Down here, but its target is going to be that same 10 pips. Okay. Right. Just put that onto the base of that other candle. Put that there. There we go. Right. Sorry, it just fired and showed me. What that does is it's the selling trade. In other words, I put a baseline in. That's the first order. And then you put 5 ticks behind it, or 6 ticks, whatever you want. And the idea is whichever one triggers first becomes the baseline for your 10 pips. And then you can set the other one as far back behind it as you like. 5 pips is fine, because the markets will do this. That's the idea behind it. So I'm kind of expecting it to push down and push up. Although on a couple of occasions what it has done is it's just picked the order up and kept on going, which is also the other reason why you let the market come to you. It's a bit of a safer way of trading. But over time you'll find it will step backwards, and the idea of it stepping backwards is you get a little bit better price. All right, so that's what that is. Happy days, happy days. So I'll just go back to the sheet while that's getting on with it. What we're looking at with this is, it started with £300, and the idea is to kind of get it up to about 1,000. Now I'm only going to run this to 30 trades, and today is the 19th trade. And why? Because it's a 30 trade challenge. It's just to show you what happens over 30 trades. And the other reason was to show you that margins catch up with you all the time. You know, when you're small and you're trying to swing for the fences, you can't, because the margin will catch up with you. And what you do is you push the envelope to the point where it's caught up, and then you just have to stay there till you've banked a little bit of money. And that also controls you, calms you down a little bit. So happy days. So what I'm going to do is I'll let the trade play out, and then I'll come back, I'll fill the sheet in. As you can see from the sheet, it's been pretty good across the board. We've not technically lost a trade, but we've had a few wobbles, and those wobbles were the conditions changed here, and we ended up having to hold a trade overnight. So we had a little bit of overnight charges, and we got out by the skin of our teeth with a small profit. And this one here is where I split the trade, and it just kept on trucking. It left one of the trades behind. So again, it was kind of a failure, if you like. It didn't do the full 10 pips for the amount of money that we were bidding. Okay, so but all in all, the results are still pretty good. You know, 21% dent in the target that I've put on, and an increase of, well, 49% on the initial balance. That's not bad for a very short period of time. So I'm quite happy with that. Anyway, let's run the trade, and I'll see you on the other side. Okay, guys and girls, there we go. It's come into target. Happy days. Took a little bit longer, but the theory was correct. You know, pick my bias, got my levels in place, and then just work towards the goal. Could have been a bit better. I could have widened out the secondary trade, but it's always hard to do that because you don't want the train to leave with you behind, but you also want a little bit extra money. But the goal is 10 pips and it's done. So let's have a little look. There we go, 11.98. So happy days. Okay, so let's pull up the sheet. Doing a little bit of work on this while we've been at this. So where are we at? So we're here, and we've achieved 11.98. So happy days. Put the date in. Yes, we're achieved. We're still on the footsie. It's a 1 hour. Still reasonably good today, and the move is still kind of ranging, if you like. Range bounce. All right. And that is that. So ready to fight another day tomorrow. Live with all of this. And that is today's trade done. But I'll kind of hit home a little bit why I'm doing this. It's because the desire to be in the markets is always massive. You know, you always feel like you're missing out on one thing and another. And because of that, you have a tendency to overtrade. And it's that overtrading that'll be your downfall. Because you'll hit a good runner, you'll think, brilliant. You'll hit the next one, you'll think, this is it, I'm amazing, I can't be beat. But the third one will take it all off you. And why? Simple maths. Markets rotate. They'll move up and they will come back. They'll move up and they will come back. Now, catching the first two stages of a move is not that difficult if you know what you're looking for. But to try and catch the third, fourth and fifth, it's very difficult. So one of the best ways to do it is, well, if you have a feeling that this is going into waves, there's normally about 5 waves. It's 3 to 5 waves of a market, up, down, and you'll see that in the moves before it does a correction. You're only looking for 2 of them. So if you can recognize the first one, brilliant. You can confirm it with the second one, catch the next 2. Well, the 5th one is the one that's going to sort of throw you to the floor. So that's why you'll often hear me say score, score, stop. In other words, get 2 bites of the cherry, then pack it in. Reset, think about it. All right. Just something for you to think about. But as always, I'm easy found. If you're looking for a good broker, do check out BlackBull at this moment in time. They're one of the few that have very tight spreads and a decent leverage so that you can stretch your pennies out. You'll find a link for those in the description below. You'll also get free education from that link. The brokers that are also there is IG. There are very good charts, but they're very expensive. And then if you want to try a prop fund like what you see me trade all the time, you'll get 5% off the buy-in. And again, in addition to that 5%, you get free education from that link. So it's worth doing. Put a few extras in the descriptions just to help you guys on your journey. All right. So trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.